Hi everyone, today we are going to talk about Edelweiss Financial Services. Edelweiss Financial Services is one of the fastest growing NBFC in the country, but just like other non-banking companies, its fast-paced growth was interrupted by the liquidity crisis that engulfed the NBFC sector since September 2018. Its lending business is facing sectoral concerns in form of constrained liquidity. However, we anticipate Edelweiss to tide through the current crisis period as its diversified presence across business segment will come to its rescue yet again. So let's look at the key business highlights of Edelweiss Financial Services. Edelweiss's credit business is its key profit driver and contributed around 84% to its consolidated profit for the first 9 months in FY19. Its credit business consists of retail segment, corporate segment and distressed credit segment, and the loan book stood at around 42,000 crore as at end December. The retail segment is gaining prominence and it is evident from the fact that it now constitutes around 42% of the total loan book as compared to 25% in 2015. However, following the liquidity crisis, the group has moderated the disbursements in the wholesale segment and as well as it has adopted a very cautious approach in the retail lending segment. So we will see a very moderated growth in the lending business in the coming period. Having said that, Edelweiss operates the largest asset reconstruction company in the country with a book size of around 45,000 crore. It has employed a capital of around 6,800 crore in this business. The prospect of ARC business looks very promising because it can potentially generate return of more than 16 to 17% if the realization on the asset is more than the cost at which it is acquired. Apart from leading the ARC business, it is rapidly gaining scale in wealth and asset management business. The performance of its wealth business has been very impressive and asset under advisory stood at around 1 lakh crore. Its asset management business consists of mutual fund as well as alternative assets, and it is also rapidly gaining scale and has grown at more than 40% on a year-on-year basis as of December end. So what's the outlook on this stock? We are very enthused by the fact that Edelweiss has evolved into a bank-like structure, getting revenue from a diversified businesses. Though its profitability has improved over the period of time, it still remains suboptimal as the cost associated with incubating new businesses is dragging down group's profitability. A significant portion of its capital, around 25% to say, is employed in the businesses that are either loss-making or yielding very low results. For example, its insurance business, that is life insurance, continues to make losses. Added to this, Edelweiss has a balance sheet management unit, which is a group's treasury function and which is used for liquidity support. This BMU is also yielding very low returns. In the medium term, though we anticipate a moderation in the lending business, we think that its profitability will be supported by the wealth and the asset management business as well as healthy recoveries in the distressed credit segment. Over the long-term period, the improvement in the profitability of insurance business as well as the reduction of the fund which are employed in the BMU will add to the group's profitability. The stock has seen some very smart recovery of late. However, it is still down 40% from its 52-week high. The sharp correction in the stock price has eliminated valuation froth and risk reward has become extremely favorable. In terms of valuation, the stock is currently today trading at around 1.9 times its FY21 lending book and around 19 times its earnings for the franchisee business. So overall, we say that given the attractive valuation and the multiple growth drivers, long-term investors who want to participate in the diversified financial services business, they should buy into the stock. That's it from our side. Thanks.